Here's how you can buy a house that needs work with as little as 3.5% down. Yeah, you heard me right. You can buy a house and actually finance the cost of the improvements into the loan and just put 3.5% down. This loan is called an FHA 203K. And in today's video, we're gonna walk you through what an FHA 203K is and the requirements in order to be able to use it. So all of the time I have home buyers reaching out saying, can I finance the cost of my improvements into my loan? And typically the answer is no. But if you're using an FHA 203K loan, you can actually finance the cost of those improvements. You can remodel your kitchen, you can do new flooring, you can take a house that needs a complete rehab and actually finance the cost into that loan. And that's exactly what an FHA 203K loan is. So let's take a little bit of time here and actually walk through how the process works and how it's different from a normal FHA loan. So for many of you potential homebuyers out there that have been watching a lot of videos on FHA loans, you understand that FHA loans are for first-time homebuyers, or typically they're known as first-time homebuyer loans, even though you don't have to be a first-time homebuyer in order to use FHA. Any home buyer out there can purchase using an FHA loan. It can be your first property, it can be your 10th property, it does not matter. And the requirements are more or less the same regardless of who's buying the property. So if it's your first time buying or your 5th time buying, the requirements are exactly the same. FHA allows you to purchase with as little as 3.5% down, so only 3.5% down to be able to purchase a property. And this is the same if the property actually needs work, if it needs to be rehabbed, it's the same down payment. So if you're buying a $100,000 home, that's $3,500. A $200,000 home, that's a $7,000 payment. $300,000 home, $10,500. A $400,000 home, that's a $14,000 down payment. And say a $500,000 home, that requires just $17,500. And the list continues to go up as you go up in price. And another thing that's exactly the same is the credit score requirements. FHA requires you to have a minimum 580 credit score if you're putting 3.5% down. Now, if you have lower than a 580 credit score, you need to put at least 10% down, all the way down to a 500 credit score. So if you have between a 500 and a 579, it requires a 10% down payment, whereas anything above 580 only requires 3.5% down. On top of that, the property does need to be owner occupied. So you're actually going to have to live in the unit that you're purchasing. It can't be purchased as an investment property. Now, we'll talk about units here in just a minute, how you can kind of house hack and buy 3 to 4 unit properties, or even 2 units for that matter, and live in one and rent out the others. And you can do that with a 203K loan as well. And you can also add on to that property and add more space. That's all part of what a 203K allows. But for the most part, it's exactly like an FHA loan. The process is exactly the same. The requirements are more or less exactly the same, except for when it comes to the appraisal process, getting bids on the rehab, which is exactly what we're going to dive into right now. Now, before we dive into that, I do want to take a minute here and just remind you there are some additional requirements, with regards to employment and, debt to income ratios, that sort of thing. I'm not going to dive into it in this video because this isn't an FHA 203 requirement video, but I will link to one at the end of the video where you can get all of the requirements for an FHA loan in general. And those requirements are more or less the same for this loan. The only difference is what we're going to talk about right now. So let's take a minute here and talk about how the actual 203K loan works, how someone gets the money for the rehab, so that you can understand exactly what you need to go through when buying a property, the process, if you will, and how the timelines are likely a little bit longer because of the process involved. So when you find a property that you want to purchase, one that you want to rehab, essentially the process works something like this. You're going to get under contract on that property, and you're going to let the agent know up front that you're doing an FHA 203K loan on this property. And the reason for that is because the timelines are usually a little bit longer. Takes a little bit longer process. It's not quite as easy as just a typical FHA loan. So you want to let the listing agent know what type of loan you're doing, just so they understand the process. So once you're under contract on that property, you're going to start getting bids from qualified contractors, from licensed contractors. They have to be licensed contractors on the work that you want to do on that property. So say you want to remodel the kitchen, you want to remodel the bathrooms, you want to maybe add a bonus room off the back of the house. Those are the things you want to do. And let's just say it's going to cost $100,000 to do it, just for topic of conversation here for this video. So what happens is when you order the appraisal through the process of getting your loan, the lender's going to order an appraisal through an FHA appraiser. That FHA appraiser is going to go out and appraise the property in its current value. So they're going to appraise it as is. And then they're also going to have those bids, the bids that you got from the contractors that show the work that you were going to have completed. The kitchen remodel, the room addition, the bathrooms, all of the stuff that we mentioned earlier. They're going to have the copy of those bids. And so they're also going to do an after repair value of that property. So they're going to have an as-is value, and they're going to have that after repair value. And essentially what has to happen is that appraisal actually has to show that by doing those improvements on the property, it's going to improve by more than the $100,000 bid that you got to do that work, right? So if it's a $500,000 property, for example, and you're putting $100,000 into it, you're financing that cost, that property has to appraise for at least $600,000 for the lender to lend you that amount of money to buy that home. So if they say, you're buying a $500,000 home and you're doing $100,000 worth of work, but it's only going to add $50,000 in value on the property, the bank is not going to lend you the full amount. They're only going to lend you enough to do the improvements that increase that value by, say, 50 grand in the example I just gave you. So typically, in order to make this work, you got to be buying a property that is somewhat distressed or outdated. You can't be buying a new property that you just don't like, the cosmetic style of it and you want to do upgrades. Typically speaking, the appraisal is not going to work in that case. You need a property that needs some love, some work, if you will, so that by doing those improvements, you're adding value. You're adding not only the value of those improvements, but hopefully adding additional value to that property so you have equity when you move into that property. That's what a 203K loan is really nice for. And one thing to keep in mind while we're talking about this is you're actually making payments on the after repair value, right? So if you're buying it for $500,000, your loan is going to be based off the value after completion, whatever the total amount that you're getting the loan for, just to be clear, right? So you're still financing that cost. You're still paying a monthly payment on that cost. They're just allowing you to do it through the close of escrow, where otherwise you would have to buy the property and actually have the cash outside of escrow to be able to do those improvements. You'd have to have the cash on hand to do those improvements. You wouldn't be able to finance them. So having a 203K loan allows you to really have just the 3.5% down payment and finance the additional cost into that loan. And like I mentioned earlier in this video, you can do this on units, from 2 to 4 units as well, which again, you have to have the value there for it to make sense. But in those cases, it can end up being a really good situation if you can find the right property. Now, on top of that, I don't want to get into a deep dive on how the process works, but essentially the money goes into an escrow company. The additional cash, that $100,000 that we're talking about here in this example, goes to the escrow company to be paid out to the contractor to be reimbursed for the works done. And I think that contractor can take somewhere between 3 and 5 draws on that amount of money. So what happens is you close escrow, that money goes into an escrow account, the contractor starts doing work, and say they complete, the first $15,000 worth of work in that house, they submit a bid to the escrow company, the invoice, if you will. And then I believe a HUD inspector looks at it, maybe even comes out to the property to make sure the work was completed. They release that amount of money to the contractor, and then the contractor gets paid, and so on and so forth. Now, one of the downsides about using an FHA 203K loan is that if the contractor ends up going over the amount that you have financed, then you as a potential home buyer have to come up with that difference out of pocket in order to be able to make it work. So you need to make sure your budgets are dialed in. You need to have overages factored in there, just so there's no hiccups at the end of the day when it comes to finalizing the work on that property. Now, one thing I kind of swept under the rug earlier in the video when I talked about getting the bids from licensed contractors is the fact that the work has to be completed by licensed contractors as well. You can't go out, get bids from a licensed contractor, and then hire some people that aren't licensed to do the work to try to save money on the deal and get more work out of it or what have you. It has to be done by the people that you got the bids from. Now, I've been asked this question a lot, and that is, what if I'm a contractor? What if I'm a licensed contractor? Can I do the work myself? My understanding is that you can't. It has to be done by someone else. Now, you might be able to finagle that in some way, but based on what I understand is it has to be completed by someone else. So now if you're still watching this and wondering, how do I get a 203K loan? Where do I start? Do I go to a bank or what have you? What I'm gonna do, there's a link in the description below. Go to that link. I'll refer you to a mortgage professional that understands FHA loans, understands 203K loans, can guide you through that process. Someone that you can trust. I'm a real estate agent. I don't do loans anymore, but I come to you as someone who's been in the business a long time, actually owned a mortgage company, understand mortgages, have done 203K loans, so I understand them. And that's the reason for this video, is to provide some education so that you know exactly what you're getting into. And on top of that, if you found any value today, I'd ask that you like and subscribe to the video to stay updated on everything real estate related. Now, earlier in the video, I did mention there's some additional requirements with regards to getting an FHA loan. And I mentioned that I would link you to a video. So that's what I'm going to do here. Check out this video, and that'll get you dialed in.